Good morning. Welcome to Market Monday for April 22nd, 2024. Well, there's this.
What does that mean? Well, let's expect it. Really expect it. Even welcome it. It may present us with a wonderful rebalancing opportunity or a chance to reinvest positions that have matured over the past couple months.
So S&P 500 about 4% off all-time high. Did you expect it? Did you welcome it? What if it goes further? Here we see the average pullback each year in the S&P 500 since 1980 is 14.8%. The average pullback. Let's keep those lead vests on to absorb further pullbacks and noise. But more importantly, what's our game plan? Do we need to do anything? If so, what are we going to do? Looking at this another way, here we see the maximum annual drawdowns again, this time since 1928. Remember, we're looking at almost 100 years as a squiggly blue line on a chart. And this can cause us to diminish the true severity of the drawdowns. I mean, look at that scale. Feature. Drawdowns are a feature of investing. Sometimes shallow, sometimes severe. How we handle these periods has a huge impact on our long-term investing success. Long-term. Why do we say long-term, and what does that really mean? Well, in one sense, going back down here, drawdowns are a feature that can sometimes last a number of years. So if your investing time frame doesn't accommodate that, you shouldn't invest in public stock markets, at least, in the first place. But that's more like not being short-term. That's not really truly long-term thinking. Here's what I mean. This is a big one. You might even say it's the big one. You've heard of compounding, right? Well, what is it? For a quick example, let's say the market grows by 10% in 2024. The market doesn't care if you made your first investment on January 1st, 2024, or if you made your first investment January 1st of 1994. It's still going to grow the same 10% either way. So again, as a hypothetical example, you could deposit $10,000 in 2024 or just $602 in 1994. That grew 1,660.26% to $10,000 on January 1st, 2024. It's the same $10,000 that's still going to grow, in our example, the same 10%, whether you started with $10,000 in 2024 or $602 in 1994. Here's another look. Here we're looking at multiples of investments in the S&P 500 from 1980 to 2020. What this means is, for example, this 1.6 here means if you put $100,000 in the S&P 500 stock market in 2020, it would have multiplied that investment by 1.6, growing to 160,000. You can see there's a fairly consistent relationship between how big a multiple you get and time. Time. There is no magic in investing, but time sure looks like a powerful force. But not just time. Lots of time. See how the multiple grows pretty slowly for 20 years? Well, a 5x multiple isn't too shabby, meaning multiply your initial investment by 5 times. But then you really see it start to ramp up, going from a 70 multiple to a 130 multiple in just 5 years, just since 1980. That includes these drawdowns: dot-com crash, global financial crisis, wars, you name it. But you got to be in and emotionally manage the drawdowns in order to get the big multiple. And today, we'll leave you with, as we've seen some geopolitical events heat up recently, here's a reminder of what the market, aside from the humanitarian part, which we acknowledge is substantial, but what the market really thinks about major geopolitical events. Have a great week.